take this debate forward. We've also got on board with us Sanjeev Bhasin joining in, and Hemang Jani from Sharekhan is still with us. Sanjeev, hi, good morning. Just understanding the prospects of pharma and how to really make that call on which stock to invest in. How are you viewing pharmaceuticals? Nikun just had a chat with Rakesh Jhunjhunwala just day before, and he believes that, stop looking and focusing on what the US businesses of these pharmaceutical companies are and what sort of pricing pressure are they going to face in the US. But look at more the domestic and inward stories. How would you approach pharma?
Yeah, good morning, Aisha. Firstly, wishing you, the entire team at ET Now and all your viewers a very, very happy and prosperous Diwali. My call for Diwali is please enjoy the weather but keep some powder dry because March could be a very, very volatile month with a lot of opportunities at much lower levels.
Sanjeev, you mean
Coming
Holi?
to pharma, it's been a dog of a sector and stocks have been Holi I meant, sorry.
Yes, happy Holi to you as well.
Yeah. So pharma has been all over the place, but like you rightly pointed out, I think if there is now one alibi, the headwind of rupee becomes a tailwind. And like you pointed out, stocks like, as a disclosure, Aurobindo Pharma or a Dr. Reddy or a Cipla, where we are extremely positive, given that we think at least a 20% upside in 2018 is on the cards. Given that they've weathered the storm well, and now the issue of FDA gathering steam on the approval front, will see a large part of new launches which could add to the kitty in the next 2 quarters. So yes, as a contrarian play, we think there is a lot of value at these levels in select pharma stocks. And as a disclosure, Aurobindo, Cipla and Dr. Reddy are something which we are constantly having a buy recommendation on.
Hemang, is that your view as well on pharma? Be selective and look at more inward stories?
Yeah, I think so because for the large companies, 50% business coming from, let's say, US and the margin pressure continues. So we would be more comfortable buying into companies like Biocon or Cipla or, Natco Pharma, which have a relatively better revenue visibility and where the dependence on US is less. And also for the larger companies, the US FDA issues also have not been solved, wherein they can start, doing the business all over again. It's taking much longer time. So I think it makes more sense to be a little cautious and selective in the pharma space.
Two stocks which I'll throw at you, Venky's and EIH Associates. Please tell our viewers, what's the deal in them? Why are these stocks going up? There is a mini selling stampede in some of the mid and the small cap stocks, but EIH Associates and Venky's are moving independently of what's going on in the mid cap world.
Looked at any of these two stocks, so I won't have any specific comments here.
Sanjeev, I'll take my chances with this one. Venky's and EIH Associates.
Yeah, so Venky's has been a huge outperformer on the back that, as the non-veg side or the chicken side starts to gather steam, consumption incomes, rural incomes rising, and the whereabouts of, dining out has become a huge upside. And I think, even though consumption of alcohol and non-veg is gathering steam on a very, very strong footing. And plus you have the whole diet now, low carb and the other types of diets playing out where chicken consumption and so on, the variables becomes a very, very big, it's seen a very big market opening. EIH on the back that the new launch of the Oberoi has been well received. It has been a, not new launch, it's the renovation. After the renovation, the new launch in Delhi has taken off with a bang. And I think if there is one industry where I can actually put my money is actually the hotel industry. So Indian hotels has been our top pick, and I think EIH Associates is gaining because of that.
Right. I want to revisit the auto dispatch numbers. It's that time of the month where we will get to hear from auto companies. Now, Jan is not expected to be a very, bumper month, so to speak. Bear in mind that the auto dispatch numbers, they remain flat in December and Jan, and then they tend to pick up in the month of Feb and March because of that entire financial year change angle. The auto dispatch numbers, they normally pick up in February and March, because you get benefits of depreciation if you are if you are using a company owned vehicle. Hemang, will this typical year end factor, do you think that factor will be at play this year as well, and we should not expect anything large from the Jan dispatch numbers?
I think, Nikunj, there are 2 or 3 distinct trends which are emerging. One is that the passenger vehicle side, the growth has actually slowed down a bit. So we really need to see, particularly Maruti, whether we are able to see a decent growth. The market is looking at about 16% kind of a growth for this month on a YOY basis. Other thing is that the two-wheelers, the tractors, and the CV, these 3 sectors are showing exceptional momentum. So whether we see continuance of this momentum on these 3 sectors is something again which we will have to watch out for. We are extremely positive, as I said before, on Ashok Leyland and to some extent on Tata Motors. Also on the tractor side, both Escorts and Mahindra have been reporting exceptionally good momentum. So that is something that we will be watching out for. Overall, we continue to be very positive on the auto sales number for this month per se.
Okay, let's also talk about some of the other names which are going to be in focus, and Fortis definitely would be one case in point. Irrespective of marquee names checking in the stock, what with Radhakishan Damani picking about a 0.5% stake there. Aside of numbers, considering they are only a reflection of how the previous quarter was and what happened in the past, but going forward, it's the auditor's notes which are a little worrisome. Sanjeev, what's the call to the retail investor out there? Because typically, when you do have some marquee names attached to some of the stocks or speculative stocks in nature, retail investors do get tempted to buy into the stocks. Would you say just stay away, steer clear, let a clear direction come out in terms of what really happens with Fortis eventually?
So Aisha, it's a glass half full or half empty. When there is so much of scam related or issues regarding the promoters and all devious misgivings, the underlying fundamentals of the business remains very robust. Whether it's an Apollo hospital or the whole gambit of hospital and the insurance business, it's a huge money kicker. It's just about getting your act together. So it's similar to the Satyam story. If you picked it up at the heat of the moment when it was undergoing the worst of rhetoric at 10 rupees, you stood to make a lot of money. And I think that's what the marquee investors are saying, that the underlying business remains good, but it's been poor management and shrouded financials which has given you the price what you are getting. So if you can weather the storm and live through the rhetoric, it may turn out to be a huge upside, because the Singh brothers holding is now abysmal. So it tells you most of the leverage part of sales against pledged stock and all that may have been history, and now a new promoter will dawn over a period of time. But like I said, you will have to live with the negative rhetoric which can continue for some time.
To be the case. Okay, let's check in on what the pre-open rates are then indicating. Starting off actually in the green as we speak, mildly so, but about a 0.3% move coming in there. But let's skip that. I want to see what Fortis is up to and whether or not you're seeing any reaction come by after they finally managed to declare their numbers post them postponing the previous quarterly announcement, and now finally being given a deadline by the regulator saying declare your numbers by the end of the month, or then get out of the F&O. You've got Bajaj Auto sales numbers coming in for the month of February. It's a 31% uptick that you've seen. So about a 3.57 lakh units is what they've managed to deliver versus the ET Now estimates of 3.4 lakh units. So that's an impressive number nonetheless. And Hemang, that's the key trend that we saw last month as well, right? Some very impressive numbers coming in from two-wheelers largely across the board. And now you have, the beaten down names like a Bajaj Auto as well joining the pack. Impressive set of numbers for February.
Absolutely. I think the momentum has come back in the two-wheeler space, more so for Bajaj, TVS. Hero Motor has not been that impressive, but I think the revival that we are seeing in two-wheelers is spectacular. And we think that this momentum can continue, particularly for companies like TVS and Bajaj Auto. So I think for another 6 to 12 months kind of a perspective, one can definitely look at buying into both these names, Bajaj and TVS.
3069 Bajaj Auto dispatch numbers are looking better. 3.57 is what we were working with. 3.57 is what they've reported, which is a good 15-20,000 bikes more than what they've reported. And again, don't get carried away by these year-on-year numbers, because there was this base effect which had kicked in because of demonetization for Bajaj Auto. I mean, Bajaj Auto, they really need to get the exports back if the company has to come back. I don't think they will be able to regain a large market share in the scooter market, because they pretty much have lost that battle to TVS and to Honda and to other players. But they have to get the exports back. I mean, that was that one big wheel for Bajaj Auto which gave them this big booster margins. And if rupee has to depreciate more against other emerging market currencies and other currencies, their export engine, which I won't say it's a broken down engine, but right now that engine clearly is in slow motion mode, that really could pick up. Sanjeev Bhasin, whereas we talk about rupee depreciation and we tend to link it with IT, pharma and some textile companies, do you think Bajaj Auto really could be a dark horse? It's an outstanding business. Their margins are better than what a TVS and Hero MotoCorp currently are commanding, and the export business, which has been on a backseat for last 2 or 3 years, that could also make a comeback.
Correct. I think you summed it up brilliantly. If they get their act together, particularly in the subcontinent area, they have a very big presence in Sri Lanka and some of the other markets, and that is actually going to be the kicker on the bottom line. Plus the new launches which are in competition with the new Bullet of Enfield is also going to gather steam. So like you said, I think you pointed it out correctly. I think in the two-wheeler segment, Bajaj Autos is the only exporter which has a large presence. And if they do get that act together, which they have indicated in the last few quarters, then I think Bajaj Auto should be one of our top performers in the two-wheeler space, given that their cost efficiencies are the best in the industry. And I think, like I said, some of the new launches will now start to kick in and on the margin front. So for us, Bajaj Auto in the two-wheeler side, rather than a Hero MotoCorp, would make a better investment.